Hi guys, Luke for the Matias Group once again. It is the 2nd of September right now. Media is flying everywhere. There are stories all over the place. Properties this, interest rates that. What I do is I always go to the source that counts. Mr. David McMillian, welcome this morning. Thank you very much for joining us. How are you, sir? What's going on here, just very quickly? What's this little...
I'm patting my dog with my one hand because I broke my other shoulder, collarbone, on the bike, mate, in lockdown. So, you know,
and place to go.
It's a good time to break your collarbone because there's nowhere to go. So can't complain at the moment, mate. All good.
Perfect. David has been my go-to for many years, 6, 7, 8 years or so in performance property advisory. All of my discussions, advice, information comes from David's business, Dave, Phil, the Daves. It's a fantastic world over there of information. You have generated your own data over the years in all states in Australia. I'm just all ears, I suppose. What's going on in the market at the moment? I might be looking to buy. Where do I look to buy? Am I looking to buy personally? Am I looking to buy to live in? Or am I looking to buy an investment property? I'm looking to buy where sort of the numbers make sense, Dave. Make the numbers make sense for me. What's happening?
I think the phrase that I've heard the most at the moment, Luke, is I'm looking to buy, but I'm holding off until something, the fiscal cliff, and, everyone's waiting for the market to drop. And I think that they'll be waiting, not forever, but I don't think that most markets are going to drop in the near term. And I think that's the biggest misconception. The media have been adamant that the market is definitely going to fall, and it's just a question of by how much. We're open to the fact that the market may fall, but we think the greater probability at the moment across Australia is prices don't fall, it's that they rise, right? So even myself, when I'm watching the news, I'm thinking, oh, geez, like things are bad. It must be negative for property prices. But when you look at the data, it tells a very different story.
Okay. So I've been quite vocal about the media maybe telling the wrong thing in lending and in potential SME work over the last few months. Tell us about this, because I read the AFR this morning and we're going into a recession and this, that and the other, and everything's going to fall off. Is it a good time now, or do I wait to educate me?
Well, I think a couple of key things. So recession since 1970, and we've had 1970, 1982, 1989, 2001, 2008. They haven't all been recessions, but they've been economic contractions. In every single one of those economic contractions, the national property market has risen the years following. Okay, so recession does not equal property price falls. That's probably the most important thing. The biggest shock absorber at the moment is the fact that banks aren't calling in mortgagee and possession sales, right? So we're seeing zero forced selling. And in fact, because of that, because of the zero forced selling and because of the fact that people think that things aren't great, no one's selling. If anyone's out there looking for property, they'll understand that there's very few properties for sale right now. And therefore, if there's very few properties for sale, even if you wanted to sell, you're not selling, because typically if you're selling, you're buying and you can't find what you want to buy. So the market right now is characterized by probably the lowest stock we've seen in decades, right? Proportionally to the population. And so what that means is demand exceeds supply. So even though there's been a reduced pool of buyers, there's been a greater reduced pool of properties. So demand is exceeding supply. And the people that are buying, as you will appreciate, Luke, they are dealing with much lower interest rates, right? So if you're a doctor or you're a business owner and you've got job certainty and things are going really well in your world, the only difference between now and 12 months ago is, your interest rate's 30% cheaper in terms of the cost to service the debt, right? So limited stock, buyers still exceeding sellers, cheap money is not a formula for a property crash. Right? It's actually a formula for the reverse. It's a formula for price rises. And we're not bullish on property. We're trying to read it accurately so that when someone comes to us and they're making a buying or selling decision, we're helping them make a good decision so they'll obviously engage with our business over the long term.
See, this is massive, and this is where we don't have a monetary relationship, etc. I simply refer my clients and friends to you because it makes me look good when you make them money. Unknown certain terms about that. When I refer people to you, they're not your average buyer anymore. They have information. It almost becomes sophisticated overnight. How do you consistently do this? I mean, what does your team look like nationally?
So
To
we like there's buyers advocates out there, and their role is to basically buy property for you. You've got a brief, they'll go out and execute that brief, and they'll help you shape that brief to try and get you a better outcome. Our expertise really is helping people shape their total strategies. That includes buying investment properties, that includes buying principal place of residence, that includes the disposition of assets, and obviously buying commercial properties for the appropriate clients. And in order to do that well, in order to advise them to build that and construct that portfolio well, you need to have research. So we learned that a long time ago. Our research program actually predates the business. And we spend about $500,000 a year on research, trying to read the market to help our clients make better decisions. That doesn't mean that we're right 100% of the time. It just means that over the long term, we make consistently better decisions than someone that is uninformed. And that's not just through research, it's also through experience and strategy and obviously our skill set coming from all sorts of property disciplines. So, when you send a client to me, Luke, it's not a conversation. They might come and say, hey, I want to buy a beach house in Dramana, and they might end up upgrading their principal place of residence because they just haven't understood or read the market correctly. They may come to me convinced they're going to sell a property because they want to sell something, and we'll convince them to perhaps hold it for the long term and maybe take it off principal and interest and speak to their broker to get that back on interest only. So, property's about it's not about transacting property per se. It's about making good decisions when it comes time to make those big decisions.
Yeah. Okay. Are you suggesting there's anything different with Victoria versus the rest of the country at the moment? What is the information or the advice any different?
We've got around 30 guys on the ground around the country. We have a Monday sweep, and these guys are either buying commercial investment properties, resi investment properties, or prestige homes. That's the pool of that's the team that we have. All of them have the same problem: no stock, nothing to buy that's quality. And when something of quality comes up, it's fought over pretty aggressively. And the market, the read on the market from the data suggests that things should be deteriorating because the unemployment rate is rising. We're in recession, et cetera. But on the ground, I can categorically say that quality property in most key markets is rising, right? And in a lot of other markets, if it's not rising, it's holding, and it's holding because with these low interest rates, it's cheaper in almost every market in Australia now for renters to be buying the property that they currently live in. Okay. So let me say that again. It's cheaper for renters to buy the property than continuing to rent it from their landlord. Okay. This is on an interest-only mortgage at the current standard variable rate of whether you're getting at 2.1 or 2.5. If you're getting money at that point, it'll probably be anywhere from, 10 to 30% cheaper per week to convert into home ownership. And so, if you've got a job and you've got income security and you do the numbers, it'll be quite compelling for you to transition into home ownership. And so we see the current prevailing conditions right now almost the opposite, almost polar opposite to what the media is saying. Yes, there is some pain out there. Yes, there are, businesses really struggling. Some businesses won't survive. There's people out there that are unemployed, but there's still 90% of the population that is employed. And on A-grade property, pretty much Australia-wide, those 90% of people who are employed, there's enough confidence there to make demand exceed supply for the moment. Now, once the market resumes to normal supply levels, that's a different test for the market. And that's something that I can't comment on because we don't have that data or that firsthand sort of on the boots on the ground feel yet because it hasn't happened. So every single market has less stock on the market now than it did this time last year.
Yeah. Okay. This is why I come to you. This is why I come to you. If I read the papers this morning, it's chaos. I come to you and you fill me with actual fact, not just what sells newspapers. And I really appreciate that. That's why I'm so forthcoming in bringing you into my network and telling your story or allowing you to tell your story. It's fantastic. Any further information? Any further little tidbits to think about, guidance, etc. What to do next?
I think we're doing an update to CBA private clients in a couple of weeks, and one of the key points, the key takeaway points, is that in Melbourne and Sydney, we see a greater probability. Like Melbourne's arguably the area that's been most affected by COVID-19. So there's a lot of homeowners in both Melbourne and Sydney waiting for the market to drop before they buy and waiting for the market to drop before they upgrade. We now think that there is a greater probability that the market in both Melbourne and Sydney, in the prestige market, say that 2 to 5 mil, has a far greater probability of rising than falling. Okay. So if you are considering an upgrade, waiting for the market to come off is probably not your, it's probably not your default strategy, because I don't think that event will happen. Now, it could happen, but the data suggests right now that it won't happen. So if it doesn't happen, what is your strategy? And that's one of the reasons why someone would come and talk to us to work out, what they should do, because I think there's going to be a lot of people that are disappointed that, the property at 2 mil doesn't become 1.8, it goes to 2.5.
Yeah, 100%. There's been so much gold. I can't wait to watch this video back myself. There's been so much gold in here. Divide it up into smaller pieces and get it across our network, just so it's wholly taken on board. I really appreciate your time as ever. Thank you for even sling and all, daughter's bedroom and all, wherever we're relegated to at the moment. Thank you so very much for freeing up some time to educate me and the network. Thank you so very much, Dave.
Thank you, Luke. All good, mate. Appreciate it.